In this video, I'm going to demonstrate to you two things. The first thing is the stock market has not topped yet. Because we went sideways from the election November until now, we're still going sideways. Just more time to reach the objective target levels. It will likely be higher because we took our time and building this base, this consolidation on the S&P 500. The other thing I'm going to prove to you in this video, and I've been showing you proof of that a recession is coming. I'll show you a couple other things. Now, first of all, I warned you that we had the December peak and we saw utility oscillator go above the signal line, but I told you it stalled at this trend line, and again warned you about the January bottom after the December sell-off, and I told you the signal was telling us that the December top was not it. December peak was not the top. We had the run-up into Inauguration Day just after that. We have a continuation of the election rally. Had another pullback with the DeepSeek sell-off and with the tariffs, setting up a higher low above the January low. I told you on January 9th and 10th we were going to bottom the following week, and we did. I believe that we are going to turn off of this trend line right here, which did in fact happen. S&P up here, again, I think it's going higher. Here, volatility oscillator, we tried to get above the signal line. We stalled at the trend line, the downward trend line, and again, it buys us more time. Additionally, not only did we see the volatility oscillator drop back below the signal line, turn off the trend line, showing us that volatility was about to drop at that January bottom, which we talked about at great length and detail here, and with other indicators back when it was happening. Remember all the bullish divergences at the January bottom that I talked about on the 60-minute chart? The bouncing off of the trend line from the 2023 low and filling the gap from the election. Remember all that? And that was when we were coming up and slamming right in that trend line, which we talked about at the time. And I told you we did see the S&P trend direction move negative. And I told you I thought it was a fake move. I told you that I did not think the December peak was it. I thought the sell-off in December was wave 4, minor wave 4, and that we're now moving into minor wave 5 here, a rally off of the January low. We'd see a continuation of the election rally from November on in the new year here with Inauguration Day, and that is exactly what happened. I think that because Wall Street loves President Trump's economic policies, but they hate his tariffs. It's going to be the economic policies that gives us the blow-off top here, but it's going to be the tariffs that give us the inflation freakout that will create a crash that will usher in the bear market that will make the Fed panic. This went briefly into the negative region. Again, if we're going to have a top, I told you we'd have to stay in the negative region. We did that in 2022, but that was just a major correction, and we saw volatility rise above the signal line and remain above it, and we saw the 27.5% sell-off. These other periods where we went into negative territory and we saw volatility get above the signal line, those were major corrections in the run-up on the S&P that we currently have. And with the volatility we've recently seen, DeepSeek and with the DeepSeek sell-off and with the tariff sell-off and the volatility, again, we're still not above the signal line for volatility increasing. That's what has to happen. You got to break the trend line and get above the signal line to have volatility return. And we're not in negative territory. And I told you, again, this is going to tell me when the market tops. The S&P trend is going to go negative and it's going to remain there. And I told you it's going to end up forming a larger divergence with the peak over here. And we're going to come back in this area and then you're going to get it and go negative. And again, volatility will remain under the signal line, but then get the final phase of the blow-off top on the S&P 500, and when we do, about a week or two after we get a peak, you're going to see volatility oscillator attempt to get back above the signal line. When we peaked in January 2022, that first week, the following week, we got confirmation with volatility rising, getting above the signal line, and consistently remaining there. Saw the S&P trend go negative and remained there. So the volatility oscillator and the S&P trend direction are not going to mark the top, but they'll confirm it right after it happens. So again, this is why I'm telling you, we're going higher. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, please consider supporting the channel. If you could take a moment to do that, I would really, really appreciate it. I don't have any sponsors. I turn those offers down because I don't want to sell you anything. I just have a direct relationship with you. If you like the charts, let me know that by supporting the channel. Channels make their money for the channels on getting sponsors. I turn those offers down. I don't want to do it. I just ask that you partner with me and let me know that you want me to do this. Let me know you want this information, you like the charts, and you like the indicators. Follow the link below to take you to a secured site. You could donate any amount you want or make it a recurring donation. If you do that, thank you. But if you could take a moment to step up to the plate and help out right now, I would really, really appreciate that. And just do whatever you can to help out right now. I would really, very grateful to you for doing that. Thank you. Watch the video all the way through. I got important things to share with you. It's pointing to a top. A little bit higher levels, a final climax high, the final blow off top. I show you amazing things on my monthly chart and my weekly chart. Fascinating things. Make sure you watch the video all the way through. Monday, the market will be closed. I might post a video to get to some things in this video and get a chance to do. I'm going to try to do it. Not 100% certain, but check back on Monday. I might have a brand new video posted. Show you why the market's about to top. Show you why a recession is about to start. Check back for that. Again, just to quickly review, this is the longer term count I'll be talking about. Show you the confluence of resistance up here. Look at the Fibonacci extensions, but this rising wedge on the daily chart is also where we're headed. I talk about that. And I believe we finished minor wave 4 here. We're on minor wave 5. Moving, bouncing off this 2023 trend line, moving up into this area here. 63, 6,400. Our time reaching it, 6,500. But this is where I think we're headed, this trend line, if we look at it up close quickly. I talked about this in my last video, so I'm just going through it fast because it's going with everything else I'm going to show you with the target levels. Is up close. Here's that rising wedge from the July peak. Again, this is where I think we're headed, up into this area. Maybe that's the 63 or 6,400. Again, the trend lines are my targets. Whenever we reach them, number is not my target. The trend lines are in the daily and the weekly time frame. But this is where I think we're headed. Minor wave 4 done. We have the first and second subwave done. We're probably in wave 3. Probably see a pullback a little bit and then go on higher. The extension of wave 3, 4, and then 5, depending on how long it takes to reach the trend line. And here I have a scenario where maybe we reach it twice. Again, my weekly charts, I told you I'm still bullish in the weekly time frame. We bounced up the 2023 trend line, got back above that 20-week at the January low, and we tested the 20-week, and we bounced off of it. I told you if we went a little bit lower, we could hit the trend line again, which we did not do. So looking for a higher low. Again, predicted that pullback. We got it. Nailing the turns. On that January bottom off the trend line and the rally and the pullback. Election rally, the December peak, just nailing these turns. The signals have done a very, very good job. Again, I think we're headed up into this level right here, and signals are turning back to bullish. This buys us more time. I think we rally going into the start of the tariffs. When the tariffs begin, we're likely going to see a massive, massive sell-off and probably peak out in the stock market in all likelihood. Take a look. Again, multiple point diversions. We can even go higher above that trend line. And back to extremes as we did here and as we did over here. But again, multiple points of diversions off of this trend line. The peak over here from early 2024. We're forming multiple point diversions, as that's telling us we're going to get a reversal very, very soon. I remain bullish in the weekly time frame because I believe that we're going to my target level, which is the trend line. Because we went sideways, again, we're likely going to go higher. This could take us into 64, maybe 6,500, depending on if we reach it immediately or if we take our sweet time getting there. Reach it immediately, maybe the 6,300 level, the mid or high 6,300. If we take our time, yeah, more like 64, 6,500. And again, we could rally into the tariff starting into the next 6 weeks, into April 1st, or shortly thereafter, and maybe surrounding the inflation report the next from 2 months from now on April 10th, CPI report. And I've talked about the channel line here. This is the log scaling right here. this is where I think we're headed, and I think we do that over the next several weeks. Again, we went sideways, but you got your diversions going on, multiple point with the RSI and the MACD here. I think it's going to end up turning back up, very similar to what we had over here. And then I think you're going to see the top. You get there, there's going to be so much complacency, nobody's going to think it's a top. I told you the January bottom, we had that fear extremes. We had reached that bullish, had a bullish divergence with fear at extremes. The herd finally got bearish. They weren't bearish at the December top, but they were sure bearish at the January low. I told you we were bottoming at that trend line. Up here, they're going to have complacency once again, and nobody's going to think it's a top. And then you're going to see the bottom fall out. When we break this trend line, it's going to confirm the top is in on the S&P 500 when we break down from the rising wedge, and then we'll eventually be headed down to that lower boundary. But real fast, look, this is where I think we're going on these charts. Show you a few other levels. Again, there's a lot of a confluence of resistance up at these higher levels. I think Bitcoin's doing the same thing, by the way. I have other levels, two other channels and so forth. This is from the 2022 low, this channel right here. But if we go back further, you have another level that's very similar to this area right here, a larger channel. And that's right here. We have the channel going back to the 2020 low right here. And again, if we draw a parallel upper boundary, we're looking at going into this, and I have one excluding the shadow, one including the shadow. I think the 2022 peak is pointing to the next top. Here with our linear scaling, I just showed you the log. Here with the linear, we had this larger channel. We have this trend line. I'm watching this. Look at the arrows. This was the peak here in mid 2023, and then we hit it again here in July of 2024. Mark the November and December peak right here. I think we're pushing up into that, and I think that's going to mark the peak right there when we reach that trend line one more time, and it will likely intersect with this level here, come very close to it. Linear scaling in the 2022 or the 2020 channel from the pandemic low on the S&P. I'm just taking channels and going further back. This is a linear scaling. The other one was a log scaling, and you get different trend lines with the different scaling. I think there's a confluence of resistance. This is where I think we're going. And to complete these divergences, I might take the NASDAQ with our log scaling here up to this trend line right here. If we do continue the rally off of the 20-week moving average. Got a tight trend line drawn here. We can go back up to extremes. And again, multiple point divergences. MACD right here, turn up here, and we can complete a divergence. Now, again, we still may have NASDAQ go higher, but it may peak before the S&P, and they may diverge at the top if we go higher. I talked about, again, them diverging at tops, which they often do. They did back over here. We peaked first with the NASDAQ, and then the S&P followed. We may see the NASDAQ reach this level. NVIDIA earnings coming up. Maybe that helps it. We rally on hopes of the tax cuts, but sell off on Trump's tariffs. Hopes of Trump's tax cuts and sell off on the tariff news and the inflation freakout. Food for thought. NASDAQ weekly chart. Now, I think Bitcoin and the S&P are both moving towards their upper channel line. Now, this is a channel. If you want to see my latest Bitcoin video, I'll link it at the end. I talk about this chart in great length and detail. Just know they both have channels. And again, I think they both, have the fake head and shoulders pattern forming the wave fours and the minor wave fours. And I think we get the minor wave 5 here now with both. And I think that we've already begun minor wave 5 with both. Confluence of resistance here in the Fibonacci extensions. Again, an extension of this move right here takes us back towards a 1.76 Fibonacci expansion up here and slams into these trend lines. You got the one up here, and again, S&P's got that monthly trend line. You got the major trend lines right here for Bitcoin and this smaller channel within the larger channel. Then I think it's eventually coming back here to take out the lows. But S&P has the same channel right here as Bitcoin, and again, I think they're both pushing up into the channels. We're going to both price in the recession. Now take a look at here's the Fibonacci extensions, and again, the confluence of resistance here for Bitcoin with the wave 5, and it's got a very similar count because they have a positive correlation. Look at the S&P situation with the S&P 500. I think we're in minor wave 5. I think we're going up to the channel, just like Bitcoin's going up to the channel. I think these highs over here are pointing to the next high. That's what I think. But I think this is where we're headed, however long it takes to reach that trend line, whether longer we go higher, whether we hit it sooner than later, then we have a lower level that we'll be reaching. The trend line is my target. And I've talked about reaching the peak and then getting a 20% crash, rebounding back up with the Fed emergency cuts. We could see emergency cuts out of the Fed before the summer. If they skip, we just had them pause here with our meeting in January. The next meeting is the 19th of March. After that, it's May 7th. The stock market peak out in March or April. If the Fed pauses at these two meetings, we could see before the June meeting, or maybe just after the May meeting, or just before it, if things start to take place at March at some point in April. But I think you're going to see emergency cuts out of the Fed. Market peaks and we begin to crash. I don't know if we're going to get pauses here, but I think, again, before the summer, I think you're going to get an emergency cut out of the Fed. If it corresponds with one of their meetings, and maybe you get the jumbo cut with it, but I think you're probably going to be blindsided as they always are, probably have to do an emergency meeting as they always do, a jumbo cut. Nevertheless, I digress. Again, I talked about this chart before. Let me show you the Fibonacci extensions. I talked about it on Bitcoin. Here I have the S&P weekly chart. Here is the Fibonacci extensions from the 2022 low. And again, we get a 1-to-1. That gave us the peak here in early 2024. Now we're getting what I think we're going to get is, I think we're going to get a 1-to-2. Or maybe overthrow the 1-to-2 as we overthrew the 1-to-1 here, just overthrowing it and going back to this trend line right here and complete the rising wedge. So again, the Fibonacci expansion, if we reach it immediately, could take us into the 6,300 or a low 6,400 area. If we take our time reaching this level, then again, it could go higher than that. The 1-to-2 Fibonacci extension of this previous move from the 2022 bottom there is currently at 63.42. Either overthrow that level a little bit, slam into the trend line as we did with the 1-to-1, overthrew it before getting a pullback, or we can go overthrow it a little bit more and just kind of go in between the 2 and the 2.27 Fibonacci extension. So just some levels I'm looking at. Again, this is just the Fibonacci extensions from the 2022 low. I showed you the Fibonacci extensions on Bitcoin from the previous bear market. Here's something very interesting. Now, again, this is my monthly chart, and this is my long-term L8 wave count Fibonacci extension. If you look at the long-term big picture, again, coming up and slamming up into that trend line, just overthrowing it long-term, back from the 2029 top. I'll show you in a second. If we look at this previous move in the 80s, this previous move right here, and that was a bull market in the 80s and the 90s going to the 2000 top, and then we went nowhere for 13 years, and we had the major sell-off, and then the rebound, 51% decline, and then the rebound to test the high, and then we went down to new lows, and we went nowhere. But if we just look at the Fibonacci extension here, it's pushing up to a very interesting level in my mind. I've talked about this long-term trend line that, again, I told you we were going to reach it, but overthrow it to reach my objective target in the weekly time frame. That's now happening. But what's interesting to me is that when we got this 1-to-1, we pulled back, found support at the 78.6 Fibonacci after busting up through it. And then when we cleared the 1-to-1, look at where we went to. This is really fascinating. The 2020 top, we just overthrew the 1.786 extension. We just overthrew that at the 2020 top. And then where did we pull back? We went back to where we broke out there at the 1-to-1. Look at that. Isn't that interesting with the Fibonacci extensions? From there, we got the pandemic low. We went up, and look where, when we busted through the 1.786 extension of this high, which we just overthrew it there, when we busted up through it, look where we went to next. The 2022 high. Where was that? Just slightly overthrowing the 2.786. Notice that. Here we pushed above the 78.6 Fibonacci, acted as support, and then we went to the 1.786 extension, pulled back, and then went to the 2.786 extension at the 2022 top, and then pulled back to where where we broke out of. We pulled back when we broke out of the 1-to-1. Where did we pull back? After bouncing off that 78.6 Fibonacci, breaking through the 1-to-1, we pulled back to the 1-to-1. Then we broke up through the 1.786, and we broke up and we went to the 2.786. And where did we pull back? We pulled back towards the 1.786. Look at that on with the 2022 sell-off. Pretty fascinating. And again, so the primary waves right here is our long-term bull market. 1, 2, 3, 4. And now we're completing primary wave 5. But look, we just overthrew the 1.786, and then we sold off sharply. We just overthrew and got that 2020 top. We overthrew the 2.786 extension, the 2022 top, and then we went back to this level. Now we're overthrowing, or I think we're going to overthrow, pardon me, we're overthrowing the trend line, and I think we're going to slightly overthrow the 3.786 fib, which is coming in at 63.03. I think that is where the top is. I think we overthrow it, just as we overthrew the 2020 1.786 extension. We overthrew the 2.786 extension for the 2022 top, just overthrew it a little bit. I think we're going to overthrow that level, and that's why I told you I think we're overthrowing this trend line to take us where? To take us where? To the trend line in the weekly time frame. And I think you're going to get your top just overthrowing this longer term trend line, and then I think you're going to see this move. Now, this is a long-term bearish case. Again, like over here, you went nowhere for 13 years. You're going to see something similar to that, where you get a crash, you get a bear market that's probably going to take us to this midpoint just beyond this level, or maybe back as low as the previous two bull market tops if we get something bigger. And then I think you're going to get another bull market or come down and get another bull market. And then I think you're going to end up crashing back to the long-term channel as we move into the 2030s. That's about the time the debt bomb's going to explode, the mess that the politicians have made. And when that happens, you're going to get a depression. The politicians are going to give us a depression. You're going to see that likely at some point in the early 2030s. That's not this crisis. This crisis is a recession. Bear market. We'll get a bull market that will follow later during Trump's second term. Oh, the tax cuts. The tax cuts are not going to stop the recession. They didn't stop the recession in 2001. They were a buy the rumor, sell the news event. Too late. Recession indicators were triggered before the election. Now, economic policy may help with the next bull market, but we're likely going down into 2026 once we peak out. Look at that. The 3.786 extension, I think we overthrow it a little bit above the 63.03 area and quickly move to the target levels I've been talking about in the weekly time frame. It's my long-term Elliott wave count. Elliott wave is speculation. What I think is going on. Again, I think we have the 5 primary waves here. Going to complete a cycle top right here that I've marked. And if you look at long-term, you want to see it? If I just zoom out here, again, you could see going all the way back to the 1929 top, we hit the 2000 top, both major peaks, 2000, 1929, where the stock market's more overvalued than it was back then. And again, right here, we've come up and we've just overthrown that trend line just a little bit. I predicted that we were going to hit it and overthrow it and move to the trend line in the weekly time frame. We're doing that now. And again, we'll likely overthrow the 3.786 extension and likely top out hitting the trend line in the weekly time frame. But this, again, I think we're eventually going to end up moving to the midpoint right here of the channel. And again, just beyond the pandemic low, I think that's likely going to mark a bottom in that area. Maybe we get as low as over here, but I think that's for the next time around. I think we get a bull market, and then I think we come back to this 1550 area or so, and I think we hit this trend line right here. So those are the next two bear markets. I think you're going to have a long drawdown, and we have periods of long drawdowns in the market. Over here, 13 years. We went nowhere. You didn't make new highs for 13 years. You went 25 points above the previous 2000 top, and then you sold off and made new lows. You didn't go anywhere for 13 years. Over here, 16 and a half years. You didn't go, well, I didn't draw that very well. You didn't go anywhere for 16 and a half years in the 60s and 70s there. Over here, you had the peak in 29. You didn't make new highs for 25 years. You would have been dead by the time you went, and if you bought the top, by the time you your money back. The market has these long periods of drawdowns. That's what we're likely going to see here. That's eventually going to take us back to this channel line. And again, you're going to have the two bear markets like we had the two bear markets over here. You're going to get one now with the recession. Bull market will follow probably in the second half of Trump's second term here, and then likely take us somewhere into the early 2030s, and then you're going to get another bear market that's going to be moving back down here towards a long-term channel. That's what high valuations are telling us, that we're not going to see these highs for at least a decade. The Shiller P ratio is predicting a crash above the 30 level. That's what that valuation is telling us. That's what the Buffett indicator being over 200% is telling us. Hey, we're going to peak here, and we're not going to see these highs for a very, very long time. The market has to have a great reset because the Fed has blown the bubble so big. There is going to be a massive reset. Long term, this is what I think is going on. I think we've had wave one, wave two, long term cycle here, and then I think you got wave three. I think this is the two corrections in 2000 and with the bursting of the tech bubble and the financial crisis. I think that is the wave three to wave four, and now I think you're getting your wave five, and I think you're going to complete a cycle top here. We're overthrowing the trend line a little bit right now. It's unlikely we're going to be able to stay above it for very long, but we're overthrowing this level, and we're probably just getting an overthrow, and then you're going to see this very large ABC type of a move over the next decade or longer.